All right, today we're pulling back the curtain on something most of us use every single day, probably without a second thought. Let's get right into it. We're calling this the savings account scam, and it's all about how banks are using your money to get rich.
So let's just cut right to the chase with a huge question. Is your bank, the place you trust with your hard-earned cash, actually working for you? Or is it just using your money as a tool to make itself a ton of profit? Well, we're going to find out.
For generations, we've all been taught this one simple rule. A savings account is the absolute safest place to park your money. It's secure, it's reliable, it's just the responsible thing to do. And yeah, for the most part, that feels right, doesn't it? But here's the thing, it's only half the story.
Okay, so let's really get into it. We're going to start an investigation into what actually happens to your money the second it hits that safe savings account. And trust me, this is where it all starts to get really, really interesting. Think of it kind of like a pipeline. It's really just a four-step process. First, step one, you deposit your cash. Simple enough. Step two, the bank agrees to pay you a tiny, and I mean tiny, fraction in interest for letting them hold it. But here's the kicker, steps 3 and 4. The bank immediately turns around and lends your money out to other people for things like mortgages and car loans. And in return, step 4, they earn huge returns. I mean, just let that sink in for a second. This quote right here really nails it. It's not some abstract pool of money we're talking about. The bank is taking your specific dollars and lending them out, creating this massive profit margin for themselves along the way.
And this is where that gap becomes just absolutely staggering. Take a look at this. On one side, you might be earning a measly 0.01% on your savings. On the other side, the bank is raking in 7% on loans or an eye-watering 29% on credit card debt, all of it fueled by your money. The difference is just astronomical.
To put this into real, actual numbers, let's say you've got $10,000 sitting in a traditional savings account. After one entire year, at that 0.01% rate, you will have earned $1. A single buck. That's barely enough for a stick of gum these days. Now, what did the bank potentially make with that same $10,000? Well, if they lent it out on a high-interest credit card, they could have pocketed up to $2,900. You get $1, they get nearly $3,000. That's not a partnership, folks. That's leverage.
So what's the verdict in all of this? Well, when you actually look at the numbers, you realize it's not a game of chance. For the average saver, it is a mathematical guarantee of falling behind. Let's look at why.
And the secret enemy here, the one that guarantees you fall behind, is inflation. It's that silent force that makes everything, from your groceries to your gas, get more expensive over time. It means your purchasing power, what your money can actually buy, is constantly falling.
And this chart just illustrates the problem perfectly. It's a race you literally cannot win. Look at your savings growth, that microscopic little bar at 0.01%. And now look at inflation, just galloping ahead at an average of 2 or 3%, sometimes way more. You're not just failing to keep up, you're actively losing ground every single day.
So the critical takeaway is this. When your money's growth rate is way lower than the rate of inflation, leaving it in a traditional bank is a mathematical certainty. It's guaranteed to make you poorer over time. Yeah, your dollar total might go up by a few cents, but what those dollars can buy is actually going down. So what on wrath can you do about it?
Well, the good news is it doesn't have to be this way. Now that we understand the problem, let's talk about the alternative. Let's look at a new blueprint that puts you back in the driver's seat. The whole solution is to find accounts where your money actually works for you. We're talking about options like high-yield savings accounts. You often find these with online banks, and they can offer interest rates that are 20, 30, even 40 times higher than traditional accounts. Then there are money market accounts, which offer similar competitive rates. These are all vehicles designed specifically to give you much, much better returns. So the smarter choice becomes crystal clear. These high-yield alternatives can offer interest rates that actually keep pace with or sometimes even beat inflation. And what that means is your purchasing power doesn't shrink. It means you get to keep the returns your money generates, not just the bank. It fundamentally flips the whole equation in your favor.
And so we end right where we began, but hopefully with a totally new perspective. Knowing how this whole system works, you have to ask yourself this one last critical question. Is your bank really working for you, or are you and your money just working for it? The choice of what to do next, well, that's all yours.